Okay, so in this video I'm going to show you guys a scalping strategy you can easily apply on the 15 minutes time frame. Okay, so I actually posted a poll asking you guys what time frame you guys mostly trade, and from what you guys actually selected, I was kind of expecting the 1 hour time frame to be the most time frame you guys trade, but fortunately it was actually the 15 minutes time frame. So most of you are actually trading the 15 minutes time frame. I didn't know. That's why I had to bring out this video showing you guys a strategy you can easily apply in the 15 minutes time frame. So in case you've not seen any poll that I've posted, make sure you hit the red subscribe button so you can actually see them and answer any question. So right now let's dive into the charts. Okay, so as you can see right here, we're actually in GBPSD on the 1 hour time frame. Okay, so why I love trading the 1H time frame is because I can actually see everything that is actually going on in the market in one glance. In terms of the 15 minutes or any other lower time frame, you have to check other time frames before you can actually know what to trade on the 15 minutes time frame. Let me show you guys what I mean by that. We're actually on the 1 hour, so let's go to the 15 minutes. And one thing about the 15 minutes time frame is that you can easily run into a consolidation without knowing that it is a consolidation or is beginning to be a consolidation, unlike the 1 hour time frame that I could easily find that out. And even if there's actually consolidation that is going on, is within the higher time frame and actually has a lot of pips that you can actually catch. But with the 15 minutes, you not have a lot of pips. Okay, so I want to ask you guys this question: what's the trend of this market? Yes, the market is actually in a consolidation, because you could actually see that price is actually moving from resistance to support. But the issue right here is that you don't know when the market will actually be in a consolidation within the points movement. So you might be thinking, okay, this is actually a downtrend, but not knowing it's a consolidation. Let me show you guys. I feel like I need to show you guys more of this thing. Okay, so let me show you guys. As you can see, price is actually in a downtrend at this point. So let's play this out if we'll be able to notice when the consolidation actually start coming out, or we're just taking on our ways and the market is actually putting us in a trap or in a box. So let's see what happens. Let's play. And as you can see, the market is actually pretty much moving in a nice downtrend. This is the point that we actually notice the market is actually moving in a consolidation. Too late maybe, so you might be up a certain percentage, but by the time you notice this, you're actually down some certain dollars. So what about if you actually place a trade here and you don't know that the market will soon get into consolidation and definitely lead you to the wrong path? Okay, so in this video I'm going to show you guys how you can actually avoid this thing happening to you on the 15-minute time frame. Okay, so the requirement for this strategy is actually a Tradingview account, and if you don't actually have that, check in the description of this video, create a Tradingview account, and you don't need to actually pay for one of the subscriptions in Tradingview. But if you actually mean business and you want to take trading seriously, I'll actually recommend you to get one of the subscriptions within the Tradingview, because it actually helps you a lot. Okay, so what we're going to be working with here is actually price movement. And by price movement, what do I actually mean? We're actually looking at uptrend, or we're actually looking at downtrend, or the market is actually in a consolidation. Now what we're going to be using here is that we're going to be using the two trends of the market to know when the market will actually get into consolidation. Okay, so I've been getting a lot of comments from you guys saying I want to learn forex with you, whether I actually have a mentorship. The mentorship will actually be launched by this time next week. So this has actually taken me a total of 2 months to actually put in the best value for you guys. So in the mentorship, I've actually put things that I've not mentioned on the channel right there. Okay, so just as I said, the course is going to be launching by next week, and with that being said, let's continue with the charts. We're going to be using two tools, which is the regression trend and the Fibonacci retracement. Now the basis of this strategy is to know the full calculation of market movement and the retracement levels of the market. This is what the strategy is actually focused on. So in order for us to get the first part of the market, which is trend of the market, we're going to be using a tool called regression trend. In order for you to get this tool, what you have to do is that you have to go to the this trend line tool. You don't need to tap this one right here. You have to go to this regression trend. You could see I've already put a star right there. Now the regression trend actually work with price movement. Can't just draw it right here and to show you, to just leave it blank. So now you might be asking, what's the work of the regression trend? So what the regression trend actually does is that it actually helps you to find the support and resistance in the trend, which actually makes you to know easily when the market is actually trying to change trends. Immediately the market actually get in a consolidation, you could easily notice it. So let me show you guys how the regression trends work. So since I've already tapped that, it's already appearing on the surface area. So once you've already done that, you have to start from the beginning of where the market actually started a trend. So once you actually put it what it does is that it actually gives you the trend of the market, it shows you the support of the market, and actually shows you the resistance of the market. I've seen a lot of people that actually use those trend line tools and they end up making mistakes on where the trend line is meant to be. Now you can also use the moving average in combination with the regression trend. So in terms of the moving average, I'm talking about the 20 moving average and the 25 moving average. I don't want to get into the nitty-gritty of this because I've already made a video on that, so if you want to see that, I'll leave it in the description of this video. But just a simple explanation of the moving average: whenever you see price above the moving average, that is trying to tell you that the market is actually in an uptrend, and whenever you see the market below the moving average, that means price is actually in a downtrend. But one thing about the moving average is that it's not actually good in consolidation. So as you can see, the moving average actually shows you when the market can actually get into consolidation. So if you use this example here, price was actually below the moving average, and right there, as you can see, we actually have price moving above the moving average, and it's actually producing little candlestick throughout that point. So if you use this and put it through and see what happens. So as you could see, if you look at it clearly, the point where price broke above the moving average is still the same point where it actually broke away from the support and resistance in the regression trend. As you can see, the moving average actually does the same thing. So the second part of the strategy we're going to be using is actually what we call the Fibonacci retracement. The Fibonacci retracement is a tool that actually helps you to find out the retracement in the market. Since we're actually using Tradingview, we actually go to this section right here. So as you can see, then bring out the Fibonacci retracement tool. This 0.0% is actually where you have to place it at the beginning of the trend, where the trend actually started. We have the 23.6, we have the 38.2, we have the 50%, 61.8, 78.6, 100%. All those lines you're actually seeing here are all key levels in the market. So this is the mathematician that actually provide the formulas to which the Fibonacci retracement actually works with. So this right here is actually the formula. So if you want to take a close look at this, you can easily pause the video and check it out. So that's how the numbers here are actually generated. So let's leave all the theoretical part of this Fibonacci strategy and let's apply it right on the charts. Okay, so let me show you guys how the Fibonacci retracement actually works. So whenever you're actually placing the Fibonacci retracement tool, you need to actually check out for some certain things. Let me show you guys. The trend of the market, the current trend of the market here should be directly opposite to the trend of the market here. You can't use the Fibonacci retracement when the market is actually in an uptrend here and the Fibonacci is in an uptrend here. The current trend of the market should be different from the trend that actually happened before. As you can see, this is actually the opposite part of the market, and this is where we are going to be placing our Fibonacci retracement. We're not going to be placing our Fibonacci retracement at this point. So as you can see, the beginning trend of this little uptrend that's actually happening here, the beginning part of it was actually the starting of this side. So put it up right there and stretch it in such a way that the current part of the market will actually be showing. Let me just explain how much simpler it could be. Before anything, the moving average actually give us the signal that price is actually changing in trend. So I want you guys to look at the charts with me. Remember, all these things right here are key levels. Why the price actually find it difficult to break that area. So why it was actually hard for price to break that area is because that's actually a point of key level. So that rest phase, and it continues in that downtrend. The next retracement level, you could see price actually reacted to this. Now the 50% level is actually one of the strong key levels in the market. Price actually had a point of hassle to break this point. Price is actually moving from key levels to key levels. So I hope you guys gained a lot of value from this video. If you like this video, make sure you hit the like button. If you're not yet part of the family, make sure you hit the red subscribe button. And the mentorship will actually be launching by this time next week. I can't really give you a date, like next week. The mentorship will actually be launched. So with that being said, I'll see you guys in the next video.